Okay, Darshan as well as Yatin, thanks very much for taking us through all those stocks that are buzzing in the dealing rooms. Well, let's now put the spotlight on Hinduja Global Solutions. The management now joins in to run us through those numbers, and Partha DeSarkar, who's the global CEO, now joins us on the show. Good morning, Mr. Sarkar. Good to have you with us on Hot Stocks. Let's first talk about your profits that have fallen much more than what revenue decline would have caused. What led to the 250 basis point margin contraction as well, if you can run us through that?
Well, margin contraction is primarily on account of our Canadian performance. Our Canadian performance has actually been quite slow this quarter particularly. A combination of factors, I would call it a perfect storm, because we did have very severe weather in this winter, and we lost about 20 to 25 working days between February and March, where people couldn't come to work because of severe snowstorms. So that's one part of the perfect storm. We've also been facing some labor shortages in the rural markets that we operate in Canada. These are small communities, and we haven't been able to hire as much as we would have liked to, and therefore we are consolidating some of these smaller centers into a bigger center in Windsor, which goes live soon. So I would say that Canadian performance is one of the factors. We've also had exchange rate volatility because the Canadian dollars depreciated quite a bit. Our Philippines branch has had pretty significant ramp up this year. For the first 3 quarters, they were only ramping up, and all the ramp up costs were there in the first 3 quarters. It's only in the 4th quarter that the revenues have started accruing. So you're kind of seeing a depressed performance on the Philippines branch. So the combination of these two, I believe that Canada will turn around by the second half of this year, and Philippines has already turned around. So overall, I believe that we would be correcting the situation in this fiscal. It's been slower than what we had thought, the margins.
And Mr. Sarkar, just talking about the concerns that you mentioned, while some of this wasn't anticipated, will these challenges affect Q1 numbers as well?
Well, Q1 numbers, we are still working through. The softness in Canadian operations will continue in Q1 and part of Q2. We are expecting the recovery to happen in the second half of the year, but that may get compensated by the fact that the Philippines ramp-up costs are behind us, and therefore the full revenue will be available for us in Q1. So how much of that gets compensated is something that we are working on right now. We believe that this year, if I look at it not as a quarter but as a year, I believe that this year, the coming year, we will see the margins improve again.
Mr. DeSarkar, good morning. Let's also talk about the business verticals. We've seen telecom, BFS, media, they've all seen close to an 8 to 10% revenue decline in the quarter. The first quarter of the new financial is also expected to be a bit soft due to the seasonality factor. Should we expect that things would pick up before the second half of this fiscal?
You have to look at our growth in perspective, and I want to probably focus your attention away from the quarter to look at growth on a full year perspective. If you look at growth on a full year perspective, we've grown at about 12%. And if you were to look at it on a constant currency term, it's 12.8%, which is reasonable growth, not very fast growth. But what is getting hidden in this number is the fact that we were doing some portfolio rationalization, and we cleaned up certain accounts which were unprofitable, and we also had some amount of slowness in our consumer electronics vertical. That impact in itself is about $24 million for the full year. So we have added 45, not only have we replaced the $24 million that we had downsized, we have added $45 million on top of that. What is visible is only the $45 million, which is the 12% that I talked about. If we add the $24 million on top of that, then our growth numbers are on high teens. So whatever you're seeing in that, in this quarter is probably not representative of the full year. It's been a year of very strong revenue growth for us.
Right. And in terms of, since we're discussing the future prospects, give us an idea on how is the order book looking right now, and even in terms of the bid pipeline, how is that stacking up?
I believe that healthcare reform is going to drive a lot of growth in our healthcare sector. We are already seeing signs of that in India, Philippines, Jamaica, and also in the US. So that's looking strong. What I would say is, if we were to look at the overall pipeline for the company, that stands at about $200 million today, and these are deals, many of these deals are in advanced stages. So I'm hoping, so none of these deals are closed though, so I'm hoping that we are able to convert these pipeline deals very quickly and see the revenues come in as early as we can in this fiscal. So the pipeline is strong.
Okay, Mr. Sarkar, pipeline is strong is the keyword there. Thanks very much for chatting with us and sharing your business outlook with us on Hot Stocks. The stock currently, though, Hinduja Global is down in trade by about close to 3.5%. But we'll slip into a short break at this point of time. On the other side, we'll speak to Sameer Nar, who's the Group CEO of Balaji Telefilms, on their quarterly earnings.